In this episode, we give you information to evaluate the quality of the financial information you're consuming. Let's get started.
Let's get some money.
From New Money, New Problems, it's the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen. Negotiating compensation, purchasing your first investment property, helping your family with money, the highs and lows of entrepreneurship. New money brings new problems that require new solutions. Join us as we work through them together. I'm Brenton Harrison, and this is the New Money, New Problems podcast.
Hello and welcome to this week's episode, and this is a unique episode. It's another week where I am on the road, and it has been, if you're subscribed to our newsletter, you know, very hectic. By the way, if you're not subscribed to our newsletter, you can do so by going to newmoneynewproblems.com/subscribe. But a few weeks ago, I spent the week at the Certified Financial Planner Board headquarters. I was part of a committee that was participating in some exam development activities. And I came home very briefly, and when I was home, my church, Riverside Chapel, had their annual financial literacy symposium. So we had 10 different workshops, a keynote speaker, and a range of different experts that came to talk to our community, our church members about things like credit, budget, investments, insurance, estate planning, taxes, entrepreneurship. And now I am in Portland, Oregon. I'll be back by the time you listen to this. You know, I don't like telling people when I'm out of town while I'm out of town. But right now I'm in Portland, Oregon for FinCon, the financial conference. And this is a collection. They call themselves money nerds. We call ourselves money nerds, for people who are growing a podcast or a blog or a newsletter or a YouTube channel, all in the name of financial literacy. And when you go to conferences like these, and this is not a critique necessarily of anybody that I meet at a conference, the mere fact of the matter is when you have a conference like a FinCon, there are varying levels of success, which is natural for any industry, but that's not what's important to me. I know really, really talented professionals who, in terms of like the virality of their content, are not the biggest that you'd find, including myself. But there is also varying levels of expertise and credentials for people who are trying to build platforms in the same space. And that is what is very interesting when you come across different professionals or at a conference like this, where you could be talking to somebody who is, you know, someone who has 30 years worth of real world experience in the field, and they have a channel or a platform that is a tenth of a size of someone who has been interested in finance for less than a year and found a piece of viral content or a few pieces of viral content, and now they have a gigantic audience that's listening to everything they have to say financially. And I do not hold any ill will, nor do I want them to not have followers, but all of these travels and meeting with people of varying levels of experience and expertise brought me to the idea of giving you just a few ways that I use to evaluate the quality of financial content that I am consuming, and also how I recommend other people do so when they ask me, what's your favorite blog? What's your favorite book? So I will put in the show notes some of my favorite resources, but it's not a recommendation of those resources. They are just examples of some of the qualities that I think are found in what I'm about to share. And we're going to start with, whenever I am looking at a new financial creator or someone else presents me a new financial creator, the first thing I want to know is, are they selling something? And to be clear, there is nothing wrong with someone selling something. Almost every person that I've had on the platform, including myself, when they're talking about growing their audience or giving you their recommendations, at the tail end of what they're doing, they're selling something. We at New Money, New Problems sell a service. We want people to be clients of our firm. It's not a matter of whether they're selling something, but if they're selling something, be it a course, be it a service, be it a product, be it a consultation, there are certain elements of how they present material that I'm looking for. The first thing I want to know is is the promotion and the quality of their product or service based on outperformance. As an example, there is a big difference between someone like a Kevin Matthews who is telling people, hey, here are ways that I use to evaluate my portfolio that I think can add value to you and make you more informed, and someone who is online saying, follow my investment and stock picking tips. For 10 out of the past 12 years, I beat the S&P by X%. And whether that person has or not, to me, when I see someone who bases their quality on outperformance, oftentimes you find that there's a lot of context missing to the performance metrics that they're sharing. And you also find yourself more likely to fall into the trap of someone who is presenting in a my way or the highway type of education style. And my way or the highway is dangerous because when you talk about real world experience in finances, you want somebody who has understood that something that worked for them may not work for everybody, or you want someone who has had the experience of seeing that something that they thought would work for them forever sometimes has its flaws as well. And when you market based on outperformance, you often find that those people are either lacking in terms of that experience or lacking in terms of that transparency in terms of what they're presenting. I also want, along those same lines, even in terms of the structure of their product or service, them to focus more on education versus outcome. I want someone going down this same example to teach you how to read a stock chart as compared to telling you that if you read it this way, you'll get a guaranteed 20% return. I want someone who is going to tell you, here's how I got into the real estate business versus saying that this is the only way to buy a property or wholesale. And if you do it this way, you'll be financially free in 20 years. These are all things that lack context, they lack nuance, and you want someone who is teaching you a style, who is teaching you a thought process, who is just teaching you as compared to having a line out somewhere in the sand saying, if you do it this way, here's what you can achieve. It's great to have testimonials. It's far different to present that testimonial as if it is the end objective, and I try to avoid that. Next, does what they're selling fit into your financial stage of life? There's a woman who teaches people how to do daily trading. Her name is Terry Ijoma. She is one of the kindest people that I have ever met. She has a tremendously large platform called Trade and Travel. We'll put the information in the show notes. Again, this is not a recommendation of her platform, nor is it a recommendation of doing daily trading. But one of the things that you will find about Terry's platform is she is radically transparent about the ways that she goes about picking stocks, her trading methods. She has other people who are experienced and transparent about what has and has not worked for them. But you will also hear her say that you need to have some foundational elements in place before you start doing things like daily trading. And what I want people to understand is you might find the best person in the world who understands property preservation, the best person in the world who understands wholesaling, the best person in the world to teach you how to save 10% on their taxes. But if you don't have foundational elements like an amount in your savings account, like having non-qualified, highly diversified stocks and investments and ETFs in your portfolio, like having low consumer debt, then you may not be in a position, no matter the quality of the advice, to spend your day consuming information about very specific information that is at the top of the investment pyramid. I'm going to put a link in the show notes to an example of the investment pyramid where it shows you the foundational elements like high yield savings accounts, like brokerage accounts, like index funds and ETFs. And the higher you get up, there are things that have a higher boom or bust potential. So yes, you could get a substantially higher return, but they also have either more risk or less liquidity. And unfortunately, I see people leaning when they start getting interested in investments and finances more towards things that are at the top of the pyramid than the foundational elements that need to be the structure of what you're building. So I want you to not just look for platforms that understand that, but even if it's not an explicit thing that they say, you have to have some self-awareness of where you are financially before you enter into and have the majority of your financial information come from these types of sources. Now, not everybody's selling something. There are some people where the platform itself is what pays them. A YouTuber who doesn't have any products or services, but they're paid by sponsors or ad content. And if they have ad content, you can have AdSense where you don't have to mention any particular company and still get money. But most people, when it comes to that level of platform where they have no good or service aside from the platform, the AdSense dollars that you're getting from something like YouTube or Google is not enough to do what you need to do. As an example, one of the sessions that I was sitting in at FinCon while I'm in Portland, there's a guy who had a viral short form video, and he got 3 million views on this video. And he said that from those 3 million views on his short, he got less than $100. It's just not enough, depending on how you structured your content, to earn a living without doing something like affiliate revenue. Affiliate revenue would be something like, hey, for example, this is who I go to when I am trying to open up a high yield savings account. Use this discount code. And on the back end, when you use that discount code, that person, that creator is getting a small percentage of what you've paid as their affiliate commission. There's no problem with that at all, but I would want people to be crystal clear when they are receiving affiliate commission. I would also want them to be transparent about reviewing other platforms. There's no dollar that I would take, for example, for a life insurance company where I would tell people, hey, you should go to this company, and if you do, use this discount code and get 15% off, without also giving people an analysis of other life insurance companies as well. There are platforms that we use for estate planning with our clients where I'll say, hey, go to this and you may be able to get a cost-effective estate plan. But I also will say, hey, here's a discount code. Here are other attorneys that you can reach out to help you with this platform. And to be clear, I receive no commission or affiliate revenue from giving you this code. You want someone who tells you with that level of, again, transparency, why they are supported and how they are supported by a certain company, and how they are going above board to make sure that they're giving you the additional information to choose whether that is the right company for you. The last two, experience versus real world advice. You have heard me say, and this is a combination of the last point being, I want people to have a consequence for giving bad advice. And I've said that, and maybe I've been too black and white about that, because in thinking back on it, it kind of implies that if someone is not licensed and credentialed and can't be sued or arrested or kicked out of the industry, that you just can't listen to them. What I mean by that is you want someone who at least understands and appreciates the fact that what they're recommending carries weight. And there are people out there who have no consequence to bad advice, who use that as a crutch to just say ridiculous things because they know there is no consequence. But there are also people who have had real world experience with several people or dozens or hundreds of clients, and people who only have their experience who are still open about why they're recommending what they're recommending. Going back to my example of Kevin Matthews of Building Bread. Kevin is a person who makes bold takes. He's a person who believes strongly in what he believes. There are also certain things where he's going to tell you, these are where I'm speaking from experience from my previous career as a financial advisor. And these are things that I just feel strongly about, but I'm going to back it up with as much data as I can. Showing you just not this is how I feel, but here's either data or real world experience that buffets how I feel. Another example is a couple, Rich and Regular. And Rich and Regular, Julian and Kirsten, great couple, a great platform, great podcast. They are a couple that decided at a certain point they didn't want to work in corporate America. And the experience that they provide on their podcast is real world experience from their journey. And not only will they share things that they have done, things that have worked, things that have not worked, they bring a variety of people on their platforms who have that experience beyond just their household to give you a fuller perspective. And to me, that would be an example of a couple where there's not like a huge real world consequence to you hearing something on their podcast that financially harms you in terms of what could happen to them. But also because of the way they treat their platform, it is highly unlikely, unless you're just misinterpreting what they're putting out, that they would recommend something on their podcast that's so specific that will put you in a position where you're harmed financially. These are the types of elements that I want from people who are giving fair and measured and balanced content. And it's something that I think you should consider when you're looking for your best blog or best YouTube channel. Shouldn't be your best podcast, because that should be this one. But I am not naive enough to think that this is the only person or the only place that you'll listen. And I hope that this is information that's valuable. Before we leave on this episode, I do want to introduce you to some of the friends that I met at the CFP board headquarters, some other financial advisors. I asked them just some lighthearted questions as we were leaving the room that I thought that you might enjoy. So take a listen to my friends as we head out for the week, and I will see you back here next Friday. All right, tell me about yourself. What's your name and what do you do?
My name is Alex Lozano, and I'm an independent financial advisor based out of Dallas, Texas.
Now, my question for you is, if you had to start your career over from scratch, what would you do differently?
I would get as much hands-on experience from people outside of your firm and just start the CFP and the education process as early as you can.
What's your name and what do you do?
Hi, my name is Marta Hydem Silver, and I am the principal of Silver Financial Service.
My question for you is, what are the fundamental steps to building wealth?
Education. Be educated, because that's the only thing that can't be taken away from you. And you need to know when something's going wrong, and you need to know when something's going right. So get educated, know your basics, stay consistent.
All right, tell me your name and what do you do?
So I'm Evan Zollinger, and I'm a financial advisor with Mountain America Investment Services.
All right, and I have two questions for you, unlike everybody else. My first question is, what is your least favorite thing about what you do?
My least favorite thing, this is probably the hardest part of my job, is when doing retirement planning, telling somebody that they can't retire yet. You know, they haven't taken the right steps, and so they're in a bad position to retire, and they have to keep working or keep doing other things to bring in additional income.
That sounds like a miserable conversation, so we'll pivot.
It's a tough conversation, it always is.
So tell me this, what's your favorite thing about what you do?
Well, on the flip side, I love providing value to people where they didn't see it was possible. Right, being able to show somebody that they do have a path to retirement and that they're not going to have to work till they die. Just those things that may seem small to me on paper just make the world of a difference to the individuals I work with, and it's an incredible experience.
What's your name and what do you do?
Mitchell Smith, and I'm a CFP in Kansas City, Missouri.
All right, I'm going to ask you, what is the most rewarding moment of your career so far?
I would say the first one that comes to mind is the first time that a client gave me a hug during a meeting. Happy with all the work we had done together to kind of get her into retirement and feel comfortable moving on with the rest of her life.
All right, what's your name and tell me what you do?
My name is Jonathan Dursteller, and I work at Kitsis, which is the permanent blog for financial advisors on strategies and learning.
Well, you might surprise me with your answer, or maybe what I expect, but my question for you is, what is your favorite piece of financial content? A podcast, a blog, a book, and what do you think it teaches people about money?
Yeah, Carl Richards has a book called The One-Page Financial Plan. It's about simplifying your finances to just a one page, because at the end of the day, finances and financial planning is a living experience that it's not going to happen at one time. That as you grow and develop in your finances are going to change. And if you think about it as just like a one and done thing, it's not going to be that way next year or tomorrow. So making sure that it's an adjustable thing that you adjust moving forward.
From New Money, New Problems, this was the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen.